Welcome back to Switzer. We've had a nice run up for stocks lately, but today Rio and BHP copped it following Chinese trade data and bearish sentiment regarding iron ore. So is the resources sector worth buying now? To answer this question, we have our sector analyst expert. That sounds like tautology, Ron, doesn't it?
Doesn't it?
Professor Emeritus Ron Bewley of Woodhall Investment Research. And are you Emeritus?
No.
Why not? What's the difference between... You
they have to
retired?
invite you and I left.
Oh,
They
okay.
didn't invite me back.
Oh, really? Well, I think
I did retire though.
Yeah, people should actually. You're definitely worthy of emeritus.
Thank you.
Anyway, more importantly, you're here.
Yes.
Blow them.
I've actually got a good story, despite
for it.
what happened today.
Yeah.
In fact, without today, I don't think I would have had as good a story.
Okay.
So the theme is, as I was doing, is where should the market be going based on our fundamentals, what we think?
Yeah.
Is it on track? Which sectors are the good ones or whatever? And what's overseas looking like?
That's
in
what
a
you do.
nutshell,
That's
what I
the
do.
Ron Bewley
Yeah.
raison d'etre.
And it takes a bit of effort, but it's a bit similar each time. But of
Yeah.
course, the numbers have moved on.
Yeah.
But if we can go to chart one,
Chart one.
if we have chart one in the right order,
Don't look to the screen with anticipation. They'll tell us when it's there.
but it might be the wrong one.
There it is. There
if
it
it
is.
comes, yes, that's the right one. Great. So
What are you suggesting that we might put the wrong chart up, Ron? Look, what have you got?
outside
A
chance.
memory or something? Have you?
outside chance.
Okay.
So this is your standard graph of the ASX 200.
Yes.
And the yellow lines refer to the forecasts I made 9 months ago.
Yes.
The diagonal yellow line is my best forecast.
Yeah.
And the dotted lines show the bounds of where I think could be the high and the low,
Okay.
reasonably big. And scientifically, not just make up a
Yeah.
number.
Yeah.
And then we move forward to
Well,
the...
hey, but so is your high 6,200? That's the extreme.
No,
is it?
not for the yellow line.
No, then the green.
No, I haven't got to the green yet.
Okay, right. So yellow.
So now, I've moved on to the green, so
Okay, right, yeah.
the leopardology in you is coming at me. So the green line is the current one starting on Jan 1.
Okay.
Yeah? And that ends at 58.50.
Yeah.
And the...
Oh, that's a little bit below 6,200.
Yeah.
So your call for this year is 58.50.
was. It's slightly lower now, but at
Okay.
the beginning of the year it was
Okay.
that. And the high was 61.50,
Yeah.
and the low was 51.50.
Okay.
And as you'll see, and I think this is the last time I was on, the ASX 200 darted down late January, early February,
Yeah.
and actually hit my low bound.
Oh, okay.
And spot on, as you can see on the chart there,
Yeah.
just went through the dotted lines, and then it shot up. And now...
And for people at home, that yellow sloping line is showing where those bottoms are. Right?
No, sorry, the
dotted yellow
parallel
line.
green dotteds we're looking at.
Okay, right, all right.
So just to the right, just
Okay,
just
good.
a month
But
ago.
you just happen to pick up your yellow line as well.
Yes. Well, because they're just 6 months apart, you'd hope there's some consistency
Yes, right.
over it.
Is it? Okay,
and
good.
it is, and I think it's showing that.
Okay.
But
So you're actually underlying the fact that you were right, and then maybe you're going to be right for the rest of the year.
and we're back on track now with this big run-up we've just had.
Yeah.
We just got onto the green line.
Yes.
So to stall a bit is quite normal. So we couldn't be closer to the green line.
Yeah, and some people will say, what's the green line
My
compared to the yellow?
forecast... Oh, sorry, it's 6 months later.
Okay.
So
Oh, you have different forecasts.
every
One-
12 months...
Yeah.
Sorry. Every day I can forecast 12 months out.
Yeah.
So every 6 months I look 12 months ahead. So the yellow is financial year 2014,
Yeah.
and the green is calendar 2014.
So therefore, you're raising your forecast?
Yes.
Yes.
So I'm happy.
Okay. Yes. And my
but
viewers
not by
will be
a whole
too,
lot.
if you're right.
Not a mammoth
No,
amount.
so
it's
it's still as good.
Jogging along.
Okay.
So what I'm saying here is that we're in the sweet spot, so we shouldn't be worried about this if you believe my analysis of broker forecasts.
Well,
etc.
why are you on the show? Because I
but-
believe your forecast.
So-
Until I don't.
So the only thing we have to worry about now is why was it just the resource companies today?
Yeah.
And, as everybody, I think
Michael Knox
Knox was saying it
sums up
before.
brilliantly.
Yeah, I caught a bit of him out there. That it's just a bad number.
Yeah.
That matters. So just forget that. Next month we'll all forget and be carrying on the policy.
So therefore, is Fortescue a buy today? Down 10%?
Well, I
Get up tomorrow morning and rip into it.
seriously put my finger on the button to buy some resource stocks, but I already had the right amount because I bought in
Yeah,
previous dips.
you've been recommending it.
So I didn't.
I'm kind of in the same boat.
But I didn't want to then be overweight.
No, me neither.
But had I not been in that position, or if I had a mate who asked me,
Yeah.
I may have given them the nod and the wink.
Yep, good, fantastic.
So we now turn to the next slide. This talks about...
Chart number 2.
This is now the sectoral breakup of that green line.
Okay,
And it's not all roses for
Okay.
resources.
okay.
So if we now...
Have a look.
So I've got light grey for the ones I don't want to talk about, but they're on my website, woodhall.com.au.
Okay, fine. And the resources is the big story today.
Yeah, so
talk resources. Right?
So materials is the name for resources in the ASX 200. And exuberance is my mispricing signal. And this has to be done on the previous day's data because today's data isn't through yet. So 0%, that was exactly fair pricing going into today.
Yeah. Okay.
So it's now 4% under.
So therefore, it's
lovely buy.
Value. So it's value.
If you believe it's a...
Yeah, and believe in right.
And I do.
Yeah.
The yield, 3.3, actually isn't bad for resources.
No, that's right.
You know, whatever. But the
and if you buy a lower price, it'll be slightly higher.
Yeah, but the adjusted gain going forward was only 3.6, but that would now be 7.6 for the next 12 months. So that's not kicking the lights out.
No.
Now, I think, as I've said before, the brokers will update their forecasts over the next few months.
And we should explain, you're analysing about 1,000 brokers, aren't you?
Hundreds of them.
Hundreds, thousands, millions. But,
not quite millions.
Yeah, but you are getting a lot of contributors to your consensus view. Okay.
And then I actually look at which ones are moving, so I build up an idea of where I think it's going. So I think this is going to be a low estimate. So 7.5% isn't bad in resources, but you wouldn't scream and say...
So the thing is this, a lot of brokers were reasonably positive about resources this year, weren't they? And so this one-day reaction to some dodgy figures in China is probably an overreaction.
Yeah, and the PMI was above 50 last week, and BHP and Rio and Atlas all gave great reports and whatever.
And didn't Knox give an interesting point that the services was doing well and construction's in there?
Yeah.
A lot of people thought they were in the industrial manufacturing.
But you see, if we don't have those people, we don't have a market to buy and sell.
Yeah.
So we need those people to think the world's ending.
That's right. Yes, good point.
Yeah. So if you now look at utilities, that's my pick for interesting stuff.
It's still the same chart, number 2.
Yes, that's a little bit boring. It's 0.2, slightly overpriced, but you wouldn't bother talking about it. Actually, I've forgotten what it did in the sector today. I think it was about line ball.
Yeah.
So it's more than... But you can get a 10.1% capital gain over the next 12 months.
So you're saying if you're not in utilities, it's still not a bad buy?
It's a very good buy because you're going to get 15.6.
And what are your 2 favourite companies in the utilities space?
Well, I thought you'd ask me that, so I wrote them down. And this is for your Switzer Super report on Thursday about how you answer that question, because it depends on which sort of portfolio you want.
Good point.
So a conviction portfolio, which is a good, solid, strong one,
having a real crack,
is AGL.
Yeah.
Yeah. If you wanted a yield, you'd be Duess and Spark.
Okay.
And if you were high octane, going for a bit of a cowboy going for a punt, it would be AGL and Spark.
Okay.
And I'll talk about how you do that and why you do that over the course.
But so for the safe investor, it's the...
AGL, just the big one, yeah?
You just go for AGL.
But if you want yield, Duess and Spark look good.
Okay, good. Duess and Spark. Okay, great. Fantastic. So, you're anticipating me, Ron. I like that in a guest.
It's on an old envelope.
Okay, mate. So, let's go chart number 3.
Yes, so now we want to go American to see how the rest of the world is going. I do it every day, but I don't usually talk about it.
Yes.
And if you remember the first chart I had with all the coloured lines on, this is like a condensed version of it, so we can see it more clearly.
Yeah.
So I forecast using exactly the same methodology, the S&P 500, going forward. But this is just this year of 2014, Gen 1 on the left.
Yeah.
So you'll see the red line started at 1850, ballpark.
Yeah.
Fell to the low forecast, and that was a genuine forecast at the time.
That's because January, early February.
Yeah, and then it shot up. Now, the low forecast, the gold, is the updated forecast, okay? So I've got 2.5 months worth of information, so I can change the forecast a little. So the low can't be above the lowest point, so that's why it's a fraction below the low.
Right, okay. Live with that.
But the yellow cross is above the black cross. So in other words, in 2.5 months, we've been strengthening our views of the US market, but we haven't been doing that in the Australian. And if you look at the high, that's going way above the 2000 level. So now we're looking for a high for the S&P at the end of the year. A value for the end of the year in the S&P for about 1980, just shy of it, but it's probably going to cross 2000 on the way. Yeah. And that will sound lovely for everybody. So although we don't have to follow the American market, we certainly didn't properly.
It's nice to have the loop.
It's nice to be on the same side.
And also, Ron, if the Yanks go up in strength, that greenback will go up and the Aus dollar will go down, and that will help a lot of the companies we're talking, and resources too.
Yes, so I think it's actually quite a nice day. I think most people watching, unless they are proper professional investors, won't be feeling happy, so maybe we can give them something to have the cookie and milk for bed.
I'm giving the wind up, mate, but as always, a great contribution. Thanks very much.
Thanks,
That's the show for tonight, ladies and gentlemen. I'll check you out tomorrow night. See you then.